Shots of the Federal Reserve Building, Jerome Powell at a press conference, Wall Street trading floor, and stock market stickers. The Federal Reserve is signaling a potential shift in U.S. monetary policy. Fed Chair Jerome Powell has indicated a possibility of cutting interest rates as soon as possible September, sparking optimism across financial markets. Fed Chair Jerome Powell speaking at a recent press conference. Jerome Powell said that we are encouraged by the recent slowdown in inflation. While challenges remain, we are prepared to adjust our policy stand to support the economy's continued growth and price stability. Graph showing recent inflation trends showing but still above target. After a prolonged period of aggressive hikes to combat soaring inflation, recent data suggested the price increases are cooling. Consumers' inflation has stalled, raising hopes that the Fed may soon ease its tightening measures. Stock market rallies, investor watching screen headlines about market gains. Markets respond swiftly. Stocks surge as investors priced in the livelihood of a rate cut, hoping for cheaper borrowing costs that could fuel economic growth and cooperative profits. Economist or financial analyst interview. Financial analysts say that the Fed's signals mark a pivotal moment. A rate cut could lower borrowing costs for consumer and business, potentially boosting spending and investment, but the Fed must balance this with the risk of inflation resurging. Shoppers, homeowners, business owners. For Americans, the prospects of lower interest rates could mean relief on mortgage, credit cards, and loans. It might also increase more spending, helping the economy maintain momentum. Why did the Fed raise rates? With brief bullet points. Remember, the Fed raised interest rates repeatedly over the past year to cool down runaway inflation fueled by pandemic disruption and supply chain issues and strong consumer demand. Why inflation is easing? It's still above the Fed's 2% target. A premature cut could risk undoing progress. The Fed is watching carefully for signs of sustained inflation reduction. Business and industries affected by interest rates, real estate, tech, and manufacturing. Some sectors like real estate have felt the pressure of higher rates with slowing sales and constructions. A rate cut could revitalize these areas, potentially boosting jobs and economic activity. Global markets and central banks. Globally, other central banks are also navigating inflation and growth challenges. The Fed's moves are closely watched worldwide as U.S. monetary policy impacts global markets and currencies. Fed bringing to dusk at dusk, Powell walking off stage, calm trading floors. As September approaches, all eyes remain on the Federal Reserve. Will they ease monetary policy and cut rates, or maintain a cautious stance? The decisions will shape the U.S. economy's path forward in the months ahead. Stay informed with the latest updates on the Fed and economy. Subscribe and follow for more.